Hey, welcome back, everybody. Here's the funny thing. I was going to wear my elf hat. You know, it's Christmas and all that happy stuff. But you see, I do have a green screen, and so I wanted to go put on my elf hat. It almost looks like a Warner Brothers. You know, if I put my elf hat on, my head disappears. And I'm sure there's some people that think that was pretty funny. But anyway, so I guess I shouldn't put my elf hat on. Unless it's a different color. Anyway, let's get the show on the road. Let's have some fun. Okay, so here's the funny thing. We have the highest sales really in the last few months. But the question is that a good thing? And what's happening and why is that happening? We're going to go through the foreclosure metrics, new construction. We're going to talk about how those are working out, plus how we are doing just overall in the market. And then, of course, what we expect next year. Hang on. All right, so one of the funny things that when we take a look at what keeps buyers on a sideline, one of them, and the number one, is rate, mortgage rate. And fortunately, we have actually been coming down quite a bit on mortgage rate consistently, for the most part, all year, especially since October. Now, the feds, when they do their rate drop, as they just did, that sometimes would cause our mortgage rates to go up. And you say, wait a second, George, the Feds just dropped the rate. You just said that. Why would mortgage rates go up? Because they're not tied together. They are two entirely different rates. Feds do short-term rates, so your credit cards, your car payment interest rate. If you have a home equity line of credit or a HELOC, what banks lend to each other on a daily basis, and then, of course, commercial loans, right? So when we take a look at what goes on mortgage rate, you need to take a look at your bonds. You need to take a look at your mortgage-backed securities. You can watch the 10-year Treasury. That will give you some really good insights as to what mortgage rates are going to do, because they follow each other pretty freakishly, but they're not tied together in any way. They just surprisingly actually follow each other quite closely. So with that, let's pull this up. Here we go. Highest existing home sales in the last 8 months, but don't get excited. Okay, why? Well, here we go. So what we're seeing is a nominal increase, a little bit more than what we would typically see this time of year. And almost all of that is based on rate. Why do I say that? Well, because even the big head sheds actually say it. Well, say, look, hey, existing sales have been stuck in the lowest gears since 2022. I 100% agree with that, because we have been kind of just normalizing our market after the crazy 2020, 2021. And when the Fed stopped buying up all the mortgage-backed securities, started putting them back on there, mortgage rates shot up. We've been getting that normalization and starting to get closer to a normal inventory level between available inventory versus what buyers want. So, moving back here, existing home sales increased for the third straight month due to lower mortgage rates, and we talked about that in October. However, inventory rates or inventory growth is beginning to stall, with distressed property sales at historic lows and house wealth at an all-time high. Homeowners are in no rush to list and sell their properties during the winter months. And as you can see below, we're pretty much even with the board. We're not changing a whole lot. We're staying pretty even keel all year long. And you're going to see that in our metrics. We're not some of the other metrics where we take these massive swings. I guess that would be a swing. But all things considered, we've been just on a gentle upward trajectory. Same thing that I think we're going to see next year. I think next year rates, we're going to see some very promising things. In other words, if you go back to last year at this time, we talk about it. I said we would be in the low sixes this year. And I think next year, Q1, we're going to kind of dip into the high fives. We're going to come back out. You can do a very short buy down, a very nominal buy down to definitely be in the fives today. The question is, does it make sense to refinance? For a lot of those folks that are considering buying, and should I not buy down my rate? Look, if you're in a mortgage, it takes about 0.75% in rate drop to make sense to do a refinance. So keep that in mind. And I don't see us getting into the mid to low fives in Q1. I don't even think that's going to happen in Q2. I think we'll stay in the high fives. I think the low sixes between 5.875 and probably 6.25. I think that's where we're going to stay for most of Q1 and Q2. We shall see. All right. So if we move ahead and we take a look at our some of our headlines here, look at that. Highest existing home sales in 8 months. That's what our title is. Bottom left, 3 straight months of improved builder confidence, new construction confidence. That is actually a big deal. They've been kind of floundering, although the last 6 months they've been doing quite well. Year over year, their numbers have been, as far as sales numbers, have been negatives. But that negative number that was at 20 or 19% is getting down closer, down into the 8%. So they've been recapturing ground. Why? People have been taking a look at a lot of incentives that buyers are offering. Buyers did a little bit of a price adjustment, although they are still higher than where they were at this time last year, and have been pretty consistent, all year long. So when we go over mortgage rates near lowest level since October, that is 100% true. So when we take a look at mortgage rates, we take a look at our Freddie Mac running 7-day running average. Look, year over year, we're down 0.51. That's 0.5%, right? Or half a point. They're one and the same. 0.5% lower today than where they were at last year. That is awesome. Okay. Now, when we take a look at that and we value what buyers are taking a look at, hey, when they're in the 6.25 and they start heading down towards 6, they come out of the woodwork, which is awesome, right? Which is another thing. There's a link down below. Look, there's no marketing. Watch the video. It will help you understand. It's 18 minutes long. It helps you to understand the 5 super important questions you have to ask when getting quoted mortgage rates. Look, banks do what's called marketing, and they will throw you these like, hey, you can get a 5.75 rate today. What they don't tell you is it takes $18,000, $6,000 to get there, that you have to buy that down. The repayment is years on that, like 43 months. And that doesn't make a lot of sense. There are smarter moves to make that you can, exceed that. And watch that video. It helps you to understand, got hair from my thing there. It helps you to understand how to literally put them up. And there's a calculator there. That's the best part. There's a freaking calculator on that same link that shows you, and you can put 4 different mortgages side by side. So take those mortgages from all the different lenders that you're going to, put them in there all side by side, and then look which one is the most beneficial for you. It breaks it down. It's super easy. All right. On to the next one. So when we take a look at the running 7-day average, which is on our right, we take a look at, this is super sad. Super sad. You know what? Let's do this. All right. So we actually, when we talk about list to sales price, we actually have hit one of our lowest numbers, 95%. Last year at this time, we were at 97%, which is where we normally ride during the cooler months. We'll be between 100 and 103% during our hotter months. And what that means is that we are, if a house sells for $100,000, okay, then the home sells at actually 95. So if it lists at 100,000, let me get that right. If it lists at 100,000, it'll sell at 95,000. Sellers are being, I think, a little bit more realistic because some of that is just overpriced homes. The key at the end of the day, hey, listen, sellers are becoming a lot more realistic. Interest rates are great. Yes, it is a fabulous time to buy because a lot of buyers are not out there looking. But is that 100% true? Is that 100% true? Let me remove myself here. Look at this. So we had 247 homes that just came on the market, the average of the last 7 days. We had 3 times as many, 287 homes went pending. So if you think that buyers are just sitting on the sideline, not doing anything, you're wrong. In fact, here's what's super funny. I was meeting with Ryan and Emily, and they're like, hey, do we need to do something different? Because we're seeing a shift here. We're seeing that a home comes on market, and normally, we have, 2, 3, 4 days before we need to go and look at it based on our schedule, but they're going off the market like next day, same day. And my comment is, yes, we can take a look at different times. However, we'll evaluate each one of them so we're not running all over the place. But to the point, yes, there's a lot of buyers out there that are being a lot more aggressive, and some of that is based on rate. Some of that is based on time of year where they know that they can get a better price, and sellers are a lot more flexible. So yeah, we'll take that case by case. But nonetheless, still between now and the end of January, it's not like, when Christmas comes, poof, it's over. Not at all. In fact, that will last until about the end of January, where we'll see this very similar benefit. And I think that you'll even benefit from lower rates as we get into January itself. All right. So if we come back here and we take a look at making sure that you subscribe, like there's no marketing here. So let's just make sure everybody gets a chance to see it. That's all this is. Ring the bell, tell YouTube that you really like it. And of course, it really helps out the channel. When we take a look at our metrics, look at this. So this is super funny. So this is as of the 20th. There's 10 more days, 12 more days, or 11 more days, I guess. And what we have here, 10 more days, today's 21st, 10 more days, 31. All right. Look, we're year to date, we're only down 242 homes from where we were at last year. And there's a lot of people saying, hey, George, is our market really doing that well? Look, we're 3/4 of Washington state, and we're 242 homes off from a very interesting year. But look at this. We have 325 more homes that are actually pended. So that exceeds the number of homes that we're actually short. Now, if we go and we take the green, the middle chart. Oh, here, hang on a second. Let me make this easier for you. There we go. We take a look at the middle chart, the green one here. Look, we're only 23 homes off year over year, but we're 348 homes more pended than we were at last year. That's a significant shift, and we will continue to see that roll in. Now, the takeaway is we won't see these actual closed numbers until January. So January is going to look really good for us because our numbers, our pended numbers actually did really well. November still had a great finish. Go back and look at the end of November video. Look, we still had some great numbers, and so we're going to see kind of a last-minute closing. We've had a number of those people going and signing in on Friday because they want to be able to close for Christmas and have a hey, very Merry Christmas to me house, and which is super awesome, right? So don't think that we're going to end on a short note, because I think we're going to end on a very, very good note. However, when we come over here, we look at this, say, hey, you know what? Pricing is still up, barely. We have a 0.1% for the same month, or $1,000 basically, and $7,000 more year to date as far as the price. Okay, so when we head into new construction, here it is. We got us. Oh, look at that! I'll be darned. I didn't copy paste, but we'll go here. Here it is. It's the better number. Forgot to put in the new chart. I put in the old chart. Look, we're only down 931 homes year to date. It's a little bit more significant of a number, but when we take a look at it on the whole, that number was into the 20s. We brought that down significantly. Pended sales are actually up 947, so it almost neutralizes the year-to-date loss, right? And when you take a look at the numbers down below for the month of December, year over year, sure, we're down 40 homes, but we're up 47 pended. So technically, we're up 7 homes over last year's numbers. So that's super awesome. And again, because they have been pulling out, because they're offering incentives, and it is still a great time to secure new construction. Now is the time between now and the end of the year. Secure new construction. They are the most motivated right now for end of year numbers. Make sure you're working with an agent who understands new construction. Just saying. If you go there thinking I'm going to get a big deal, I'm going to not have to pay, I can negotiate that buyer's agent commission. you might get a third of it, maybe. They know you don't know how to negotiate that one. I don't mean that in a bad way. There's a lot of technique on the backside to gain additional value that the builder's obviously not going to tell you. They're not going to offer it to you. But if you know where you can get and pull in more dollars, how you can do better in your negotiation, those are people that work with builders and understand that technique. I'm just saying, it'll only cost you a couple of $10,000 is all, $20,000, however much. Anyway, just saying. All right. So if we come back here, we head over. Again, our numbers are doing really well. As far as sales prices are actually higher than where they were at last year, and it's a pretty good number there, okay? So bank-owned is, the numbers look super interesting. The however is, it's really not. Look, we're 19 homes more on market than where we were at last year, which is pretty much peanuts. We have 10 more homes that came on market. It's pretty much peanuts too. Again, this is 3/4 of Washington State. Solds are up 20%. That's 3 homes. It's because our numbers are so low. As you heard, our numbers are super, super low as far as foreclosures, especially in our area. And make sure that you are getting the real story and not what the sensationalized media is trying to tell you. Because when you hear, hey, foreclosures are up 20%, or, foreclosures that hit the market are up, 20%. Well, when you know that that's 10 homes across 3/4 of Washington State, there's more cities than that. Anyway, just saying. All right. If you have any questions, put them down below. Make sure that hit that ring the bell. Everybody likes to ring the bell, especially at the bar, right? Look, give us any comments. It's going to be it's kind of a great day out there, and cold. So stay safe. Have a very Merry Christmas. Hopefully you'll get a magic hat like me sometime. I think that's pretty cool, almost like a Warner Brothers. Anyway, I'll see you guys on the next video. Might even just see you next year. Have a great day. Merry Christmas. All the best to you and your family. Take care.